The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to this Friday edition of Squawk Box Europe. I'm Steve Sedgwick with Ben Boulos and, of course, Arjun Kabul, who has some amazing coverage out of New Delhi. These are your headlines. Oil prices rising, with Brent now sitting well above $70 a barrel as US President Donald Trump warns of consequences if Iran doesn't agree to a deal in the coming days.
They cannot continue to threaten the stability of the entire region, and they must make a deal. Or if that doesn't happen, I maybe can understand. If it doesn't happen, it doesn't happen. But bad things will happen if it doesn't.
Private credit names slump after Blue Owl restricts investors from exiting a debt fund for retail traders, sending tremors through the sector.
CNBC confirms that Nvidia is readying a fresh $30 billion investment into OpenAI. This, as the CEO of Google, DeepMind, tells me the industry is reckoning with a shortage of memory and chips.
It still, in the end, actually comes down to a few suppliers of a few of the key components. So anywhere where that's there's some kind of constraint on the capacity, there's a sort of choke point.
Split fortunes in the air. Airbus shares tumble as it cuts its output target, but carrier AF-KLM soars as it posts over €2 billion in full-year profit. The CEOs of each firm outline their success and challenges to CNBC.
We are not blind, but we have an unsatisfactory situation with less engines than what we would need for 26.
We're seeing point-of-sale Europe premium cabins holding up relatively well. In the economy cabins, we're seeing softness. Out of the US, we're seeing healthy demand in all cabins.
President Trump says he will decide in 10 to 15 days whether to continue talks with Iran or begin military action. His latest comments come after the president spoke at a Board of Peace meeting in Washington, D.C., saying bad things would happen if a meaningful deal is not reached with Tehran. Dan, your coverage yesterday really laid out the foundation for the region, for the countries involved, and indeed for the underlying commodity, the oil price as well, which I think a lot of our viewers are fascinated by. How has the story moved on in the last 24 hours?
Well, Steve, first of all, in terms of the price of oil, we're now seeing crude pushing to a 6-month high, actually up around 5% for the week so far. So some of that geopolitical risk premium is being reflected in the price. And at the same time, what's changed? Well, we now have new reports that suggest President Donald Trump is weighing what could be a limited military strike on Iran, and that could come within days. The Wall Street Journal also reporting the initial options under discussion could potentially target a small number of Iranian military sites or government sites as well. And the goal here, at least according to that reporting, would be to pressure the regime without immediately triggering a full-scale war. After we heard that report coming out, President Trump also speaking to reporters on Air Force One in the last few hours, saying that he would give Iran a maximum of 15 days now, 15 days to come back with a solution to this crisis. It's an arbitrary deadline. We've heard this from the president before, but of course markets are taking notice. All of this also coming as the US amasses what's being called now the largest military buildup in the region since the invasion of Iraq in 2003. For more context, here's the president speaking earlier.
They cannot continue to threaten the stability of the entire region, and they must make a deal. Or if that doesn't happen, I maybe can understand. If it doesn't happen, it doesn't happen. But bad things will happen if it doesn't.
The president speaking there. And of course, we have also seen a response from Tehran now as well. In a letter to the UN, Iran said it would not start any war, but that it would exercise its right to self-defense and also respond decisively and proportionately if it was provoked. I spoke earlier today to the former US ambassador to Israel, Daniel Shapiro, who's also very clued in on all of these issues. He weighed in on Access Middle East with regards to the timeline and the type of potential strike that we could see. Listen.
Everything is in place, or will be within by Saturday night, for strikes to commence. And so the window opens then. Now, it doesn't mean that's going to happen immediately. The president did indicate that he's waiting to hear from Iran whether they are prepared to make concessions on their nuclear program that he's insisting on, which means removing all their enriched uranium and any ability to enrich uranium in the future and declare they will not, and anytime, anywhere inspections. I think it's unlikely. We've never seen Iran open to those types of concessions, so I think it's unlikely they will agree to those, which means that in the days coming, the president will have to make that decision on military strikes, and he will have to do it relatively soon.
Daniel Shapiro speaking to CNBC earlier today. So it would appear that the framework for potential strikes is now in place. The hardware is moving into the region, and the president has been ramping up the rhetoric as well with attempts to pressure Iran to come back to the negotiation table. So all eyes on the region to see what happens next. At the same time, President Trump also declaring what he called a monumental breakthrough for Gaza after the first meeting of the President's Board of Peace. The president announcing that the US would commit some $10 billion to the board. He also claimed an additional $7 billion had been pledged by these countries that are taking part, including the UAE and Saudi Arabia. Saudi Arabia pledging $1 billion, the UAE pledging 1.2, so really putting their money where their mouth is. The plan here includes training a future Palestinian police force and also troops for an international stabilization force. But of course, the details here also really thin. Plenty of gaps remain, and gaps in understanding in terms of how this is going to work. I have also spoken to analysts today who say, well, how could you possibly push ahead with this Board of Peace plan when the Palestinians haven't been included in the conversation? It also fails to address some really core issues here, including what steps are being taken to disarm Hamas, what steps are being taken around Israel's military posture, and of course the future of the blockade that's still in place as well. And it's not just that lack of Palestinian voices, it's a lack of European voices too. They were also underrepresented in the meeting that took place overnight. Hungary and Bulgaria were the only EU nations to join the board. Most EU states actually rejected the invitation. They're saying that this Trump-led entity would undermine the UN framework and give the president undue influence over the decisions that the board makes. So while we have seen big dollars being committed to Gaza's reconstruction, which is the overall aim of the board, again, some clear issues here, not just on the European side, but also into the mechanics of exactly how all of this is going to work.
All right, Dan, excellent coverage as ever, and we'll come back to you a little bit later on. Thank you very much indeed for that. Ben.
Yes, this is the picture on the US markets. They had a somewhat shaky Thursday, those concerns over the tensions between Washington and Iran that Dan was just referring to there, and the impact on the price of oil, pushing it up around 2% at one point. There are also concerns about private credit. This is after Blue Owl Capital tightened investor liquidity, selling $1.4 billion in loan assets. Software stocks also ended the day in the red. Salesforce, Intuit and Cadence Design Systems all dropping. The main US markets all closing the session in the red. Let's look ahead to the trading day in Europe, expecting positive open when they begin the Friday session. Lots of results have been out this week for investors to chew over, including Air France-KLM, whose shares were up more than 11%. To the downside, Airbus shares fell 7% on Thursday after the plane maker said it expects to deliver slightly fewer commercial planes this year than analysts had expected. Traders also digesting the share price and results from Renault and Nestle. Back over in the US, let's look ahead to the Friday session. Plenty to keep people occupied there. We are anticipating possibly a Supreme Court ruling on the tariffs, the legality of Trump's tariffs. That may come on Friday, whether those stand or whether they're knocked down. Also, data out. US fourth quarter GDP reading. Economists expecting a gain of 2.5%. And the PCE inflation reading. Yes, we had the Consumer Prices Index, but the PCE is the Fed's preferred measure. We'll see what that shows. Analysts expecting a 2.8% rise year on year. So plenty going on in the US on Friday.
Very good, Ben. Thank you very much indeed for that. Right, the Minneapolis Fed President Neil Kashkari has hit back at the president's National Economic Council director, calling his criticism of tariff research just another step to try to compromise the Fed's independence. It comes after, as you're very aware, I'm sure, Kevin Hassett, in a CNBC interview on Wednesday this week, called for New York Fed staffers to be disciplined after the release of a research paper, which showed around 90% of added tariff costs were being passed on to US businesses. Meanwhile, the US trade deficit jumped well above expectations in December, bringing the annual imbalance to essentially the same level. Well, I know, I need to be absolutely accurate. 0.2% less than 2024. OK, we'll call it the same level as the year before, despite President Trump's sweeping global tariffs. The full-year deficit came in just above $900 billion, 0.2% lower than 2024, and only slightly less than 2022's record level. Well, let's go through some of these things. The deficit is a key point that the president believes is the American people being cheated. The American people and American manufacturing subsidizing the rest of the world. Other people would say, well, actually, being in a luxurious position for having a deficit where people actually will sell you goods and then give you the credit to do so using your own dollar, that's a very luxurious position. But the president has put his stall out and has said for many, many years what an evil trade deficits are. Well, it is 0.2% different on the previous year as well. It had its largest goods deficit with the European Union at $219 billion US dollars, with China at $202 billion and Mexico at $197 billion. Now, tariffs do many things, and you quite rightly said about the Supreme Court ruling that may or may not today give us some clarity on the legality of those tariffs. But it appears that the tariffs so far, and again, we are only so far into this journey, have not erased in a meaningful way the trade deficit.
Just to put the counterpoint, would it be fair to expect them to have erased it so quickly? Because a lot of the pledges that were made from companies in response to the tariffs was they will invest in boosting their US-based production. Of course, that doesn't happen in weeks or months, does it? That takes years in some cases. So, I mean, I suppose the defence to it would be, of course it's not going to have had a big effect in the first year. These things take time to actually filter through and have an effect in the real world. I don't know if that's the argument they would make, but I imagine that would be the sort of defence that you might hear.
I think that would be a very fair defence, actually. But at the moment, it is very hard to see the evidence of the tariffs having a meaningful change to the US trade picture. But I take on board your point absolutely fully. Did you want to just go into a tiny bit of detail about the Supreme Court ruling? Because I know it's something you've been looking at.
Yeah, Supreme Court ruling, I mean, we say it's anticipated that it could come on Friday.
Because we never get to know in advance.
We never know.
No.
They never say for sure which rulings they're going to hand down. But it's possible that the Supreme Court will give its decision on the legality of President Trump's tariffs he imposed them under what's called the International Emergency Economic Powers Act. Now, depending on what the Supreme Court decides, traders seem to think that the stock market will react positively if those duties are knocked down, even though they fully expect the White House will then try other means to reapply those tariffs at another time.
Superb. Right, let's move on.
Yes. Also mentioned that shares in alternative asset manager Blue Owl Capital closed almost 8% lower after announcing it would curb investor liquidity along with the sale of $1.4 billion in loan assets. Investors will now receive periodic payouts from Blue Owl rather than the regular quarterly payments it had originally set out. The sale of loan assets, which amount to 30% of its total assets, will be used to pay down debt and return capital to shareholders of one of its funds. The news has sparked fresh concerns in the world of private credit, sending shares in Blue Owl's peers lower in US trade. Our US colleagues will speak to Blue Owl Capital's head of credit later today. Don't miss that interview. It is coming up at 2:15 this afternoon, UK time. And coming up on this show, tech leaders hail the potential of India as they gather for the AI Impact Summit. We'll be live in New Delhi. Plus, split fortunes for French airlines, but who is flying high after the latest numbers? We will take a closer look with Charlotte. And Anglo American takes a $3.7 billion hit after another write-down on its diamond business. We'll talk through the group's latest results and outlook for the British mining giant with the company's CEO, Duncan Vanblad. That's a first on CNBC interview coming up at 8 o'clock London time.
I'm Steve Sedgwick from CNBC, and in my new podcast, Executive Decisions, I ask powerful leaders about their decisions that changed everything.
I'm not frightened of making tough decisions, and I think leadership can be very lonely.
Business leaders should not stay quiet in a world which is super complex.
It is absolutely fine to also change your mind.
Tough calls, personal crossroads. These are the stories that we can all learn from. It's Executive Decisions from CNBC. Get it wherever you get your podcasts. The Indian Prime Minister Narendra Modi met with tech leaders at the AI Impact Summit in New Delhi yesterday, who hailed the AI potential of the country whilst also calling for equitable access to the technology. Now, regulation and safety had also been in focus at the summit, which Arjun asked the UK's Deputy Prime Minister, David Lammy. He was there. Let's see what Mr. Lammy had to say.
India has emphasised safety and security just as we have, and that must be the foundation, and we're pleased to see safety institutions opening up across the globe. But it's also right that we look at how we can apply this new technology in different settings. We have huge strengths in life sciences, in health. It's been interesting to see India talking about the possibilities in agriculture for ordinary workers, yes, in India, but also across the global south. We've got 150 businesses and entrepreneurs from the UK engaged here already in Indian industry. We want to see more investment, more possibility over the coming weeks and months, building, of course, on our free trade agreement.
Well, Arjun joins us now. Our producer Jordan says you have a cornucopia of tape for us. A cornucopia is a symbol of plenty, of a goat's horn overflowing with flowers, fruit and corn. Don't let us down, Arjun.
What a great word. Look, there's been a lot of conversation I've been having over the past few days here in India. You mentioned about India and its positioning in this sort of global AI race. India is trying to come out strong here at the gates and say we've got a huge pool of talent, we're developing technology here in India, plus trying to garner in a big investment from big US tech firms, which we've heard not just this week, but certainly over the past few months as well. But look, underlying all of that, there is this continued conversation around the US and China when it comes to their own battle for supremacy around technology. And certainly you can't keep China out of the discussion. Just in the last 2 weeks, we've seen some pretty advanced models coming out of China ahead of the Lunar New Year, including from companies like Alibaba and ByteDance, etc. So I've been speaking to technology executives about that. One of those is Demis Hassabis, the CEO of Google DeepMind. I caught up with him at the back end of last year. At the time, he told me China is just months away from US and Western frontier models. I asked him, given what we've seen out of China in the last 2 weeks, if his assessment has changed and if China are any closer. Let's listen in.
There's very talented teams. I know the ByteDance team pretty well. They're very, very talented, and I think the seed models are really good.
You and I also spoke about, you said there's 1 or 2 more breakthroughs that need to come before we reach AGI as well. How much are the restrictions at this point? We spoke about some of the breakthroughs in terms of the models, but how much are the restrictions at this point physical? Yeah. I'm talking memory shortage at this point, GPU shortage, and electricity.
Yes. I think that's constraining a lot of the deployment, for sure. We see so much more demand for our models, Gemini and the other models that we have, than we can possibly serve. And but also it does constrain a little bit the research, because you need a lot of chips to be able to experiment on new ideas at big enough scale that you can actually see if they're going to work.
I was speaking to Sam Altman earlier. He said sort of the shortage in chips could be a real potential choke point for the industry more broadly. Right now, how big an issue is memory access?
Yeah, memories, I mean, the whole supply chain is kind of strained. We're lucky because we have our own TPUs, so we have our own chip designs. But yes, it still in the end actually comes down to a few suppliers of a few of the key components. So anywhere where that's there's some kind of constraint on the capacity, there's a sort of choke point.
So that was Demis Hassabis there, CEO of Google DeepMind. Couple points. One on China, saying that yes, they could indeed be closer after what we've seen over the last 2 weeks. The second point here, something again top of mind for the leading frontier labs, is around access to compute, i.e. GPUs, memories and other kinds of chips. Demis Hassabis, they're saying this could constrain research around AI. So what's going to be interesting is how much this slows down, if at all, the development of new models this year. Just want to switch tack because another big conversation here is certainly the impact of AI on software. That has been a huge part of the conversation. The Mistral CEO just a couple days ago told me that he believes 50% of an organization's current SaaS or software they buy could shift to AI. One of the big players that's been affected by this big sell-off in software stocks is Infosys, the Indian IT giant. Now, they struck a partnership in the last couple of days with Anthropic, one of the leading AI labs, of course. The idea is that they're able to take Anthropic's models and build them and deploy them in enterprises that they work with. I asked Salil Parekh, who's the CEO of Infosys, to give us a bit more color on this and indeed whether this was a defensive move in light of that stock sell-off. Let's listen in.
Anthropic, of course, have incredible technology in the foundation model, Claude, Code. Of course, they also have Cowork. But the big use case that we see today on Claude Code is software development, and on Cowork on customer service. So that's what they bring. They have incredible technology. We have very strong knowledge of what goes on with the large 2,000 global companies, and we will bring the benefit, in this case, let's say, of Claude Code, to work with Infosys engineers to make applications that are usable for clients, essentially building out agents or using a set of agents already developed and orchestrating that for creating value for clients. So there was huge excitement from Anthropic, there's huge excitement from Infosys, and more importantly, there's huge excitement from our clients who want to deploy these technologies, and a lot of excitement from our engineers who want to work on these things.
Was this a offensive or defensive move?
I think the approach we've taken is, what are clients looking at? So we've been working with Anthropic and foundation models for some time, so for about 3 years or so, on different aspects. This was a method of actually elevating it to a strategic level.
I spoke to Sam Altman yesterday, and one of the part of the conversation we had was around the enterprise. Anthropic is very strong in the enterprise space. It's a space OpenAI want to grow market share on as well. Have you spoken to OpenAI? Are you looking for a very similar collaboration with them like you have with Anthropic?
What OpenAI have built is incredible as well with Codex. We're working very closely with about 16 foundation models, the 3 very large ones, of which OpenAI is one of them. And we're already doing a lot of work with clients with them.
I think this is a really interesting partnership, actually, because Anthropic are developing the models, but actually they're only going to make money if these actually end up in the enterprise. Infosys, of course, is one of the biggest IT companies that works with business customers to implement IT into their companies. And so what they're doing is taking Anthropic's models and actually implementing those in the enterprise. So it appears to be a win-win at this point for both sides, but also it's a way for Infosys to, I guess, push back to some extent against investors who are suggesting this is a company that could be impacted by companies like Anthropic. So a really interesting deal. Going to be very keen to see how it plays out in real life as well, Steve.
Yeah, I think it's fascinating, and I've been listening to as much as I can of your coverage, which has just been as superlative as ever, Aj. What do you think? I want to know, because I've got 2 schools of thought here. One, of course, the software sell-off school, where it's Armageddon for a lot of these players when AI encroaches upon their space. Or B, actually it's going to be some form of, I don't know, paradise, some nirvana, what have you, where actually they're going to coexist beautifully and it's going to only create more profitability. What's it going to be? Armageddon or paradise, or is it some mishmash in between?
It's a mishmash in between, and I think we have to break it down by these different types of software. So there are companies, one of the big issues right now around enterprise is the fact that you can imagine there's a large-scale enterprise. They've got data everywhere, and some of it's not connected, and some of it's not talking to each other. And so if you deploy one of these AI tools, it can't connect all these different dots. So there are companies and software companies out there whose job it is to effectively clean up the data within an organization so it's ready to be AI-ified, I guess, to some extent. And so those are companies where you think, well, they're going to work in complement with some of these AI companies because their services are required for the likes of OpenAI, Anthropic, etc., to deploy their services. Then there are those SaaS businesses that companies pay for right now that perhaps do more relatively simple workflows within an organization. You could think of things like, expense management or HR tools, legal tools. There's plenty of different areas where this could be, where there are companies that are going to be looking and saying, do I need to be paying this company our SaaS subscription, or can we build one of these AI agents in order to do that? And I think those are the kind of companies where we're going to see affected really by these sort of onslaught of AI into the enterprise.
Okay, Arj, thank you very much. We will join you a little later. And this year's AI Impact Summit has been marked by controversy around Bill Gates amid his past relationship with convicted sex offender Jeffrey Epstein, with the Microsoft co-founder eventually skipping the event. For more details on that, there's a full write-up on our website. Just go to cnbc.com. Nvidia is in talks to invest up to $30 billion in OpenAI. This is from a source who has spoken to CNBC. The investment is part of OpenAI's new funding round, which could value the ChatGPT parent at a $730 billion pre-money valuation. The money would be separate from the previously announced $100 billion infrastructure agreement, which the FT reports the companies have abandoned. Amazon's cloud unit has reportedly suffered at least 2 outages due to problems associated with its own AI tools. That's according to the Financial Times, citing sources familiar with the matter. Disruption at Amazon Web Services in December had reportedly involved an issue with its Kiro AI coding tool. In response, Amazon said it was, quote, a coincidence that AI tools were involved, saying it was a user error, not an AI error.